turn back to stocks that you should watch out for in trade today, and one of them certainly is going to be HUL. We brought you the preview for HDFC Bank, but this really is going to set the tone for the FMCG space. We've been speaking about how consumption is a bit of a question mark. What are the numbers going to look like? You've gotten a glimpse, of course, based on the initial numbers, the business updates that were sent out by the company. But Mahima is bringing in what is expected on the earnings front. Mahima?
Right. So Q3 again is going to be a muted quarter for HUL. In terms of the Bloomberg estimates, we are expecting an uptick of around 3% in the revenues. EBITDA is going to remain flat. Margins will take a hit to 23% from 24%, and this is on the back of the raw material inflation that is going on. And net profit may rise by around 5% odd. Now, in terms of what to expect, single-digit growth overall, demand to remain muted, especially in urban areas, margin contraction due to raw material inflation, volume growth to remain range bound, and this is because company would have taken price hikes, and improvement in rural consumption is something to kind of expect. Now, what to watch out for? Their commentary on the new subsidiary. They've now decided to make a new subsidiary with for their ice cream business, which is Quality Walls. The commentary coming in on that. The commentary coming in on minimalist acquisition is also something to watch out for. Demand recovery in urban areas and the quantum of price hikes that the company has taken will kind of determine as to how the margins pan out. In terms of brokerages, Axis Security believes that revenue is expected to grow on 3%, 1% volume growth versus 3% volume growth in Q2, 2% price hikes are expected, and EBITDA margin is likely to decline owing to higher input costs. Nuama says demand trends to remain similar to Q2. Exceptional items are likely to form as a sale of Pureit. Systematic says that faster growth of small packs will impact the product mix, and hence this will also impact the margins. Winter portfolio to underperform, and price hikes won't fully offset the sharp inflation in palm oil. Lastly, HDFC Securities believes that urban slowdown and increased competition across categories would hurt the performance of HUL, and hyperinflation in raw material index to weigh on gross margins, and higher royalty rate and termination of GSK consumer distribution contract will also kind of hurt margins. So margins will definitely take a hit when it comes to Q3 numbers for HUL.
You know, I'm just wondering, Mahima, as a defensive play, how Street is looking at an HUL or any of these majors. And are you going to be looking out very closely for what kind of commentary is coming from HUL on demand, especially rural demand?
Not just rural demand. In fact, rural demand, we're definitely expecting a recovery there in terms of small packs, but that will kind of hurt the margins. But something that we really look forward to is the kind of urban recovery that is taking place. Since the past 2 quarters, we've seen that there is a slowdown in the urban recovery, and that is where the margins come from and the top line and volumes come from, which is why we are expecting that if a positive commentary on the urban recovery comes into picture, we'll see that the other staple companies will also have a good set of numbers, but which is unlikely. So that is something to watch out for.
Yeah. So no, I mean, if there's pain across the board on consumption, then HUL is the bellwether to give us that picture. No doubt about it. Thank you for that, Mahima.